All right, so the markets open up the week on a little bit of a down note, but again, nothing too significant that we saw today. We had such a good rally on Friday, one of the better rallies that we've seen. One of the exactly the type of short-term bounce that we typically want to see. If you watched the Friday free Friday market outlook video that was available for everybody there, the question now is today is okay. So is the lack of follow through one day later mean anything? Does it mean that now, okay, we're not going to continue to bounce higher? What do all the other indicators say? And what was like, there was an interesting, we didn't quite have the rotation and intermarket relationships last week that were conducive to a bullish move until, even on Friday necessarily. And so what did we see today? And we saw a really interesting snapback today to some things that we want to see and other things like that three-headed monster I brought up before that we don't necessarily want to see. So how do we reconcile that so that we have our expectations for the rest of this week? So that's what I'm going to break down in today's video. Of course, we're going to take a look at all the technical signals and the intermarket relationships. The big one, the big three, we'll break that down and what it did today. And we'll also take a look at our sector moves and then the breadth signals that flash some interesting signs today again as well. So we'll break all that down, as well as our trade idea that did follow through on Friday's rally to the upside. So we'll talk about how to trade that, especially with what we expect to see from the rest of the market. So let's go ahead and get started. Today is Monday, August 25th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Let's go ahead and get started and take a look at the S&P 500 with the Market Forecast Indicator. We finished the day down again, but only down, a half a point. You can see, look at the range. The range on last Thursday was 40 points. 40 points, 64, see, that was Thursday. Yeah, that was like one of the lowest days. It was only 17 points on Monday. Today was 28. So just a really, really small range. Again, half of what is already an extremely low ATR. Like that ATR is that's not a normal level. We are well below 1%, 1% being 64 points. We are at 57. So well below a already extremely low half of that. And that's what today's range. And that's how Mondays happen, right? There's not a whole lot going on Mondays. We had such a big move on Friday. The near-term line has moved higher, still not in the reversal zone yet. The momentum line dropped, as you would expect, when you have a small day and a down day on top of that. So, but it did not drop to extreme lows. We're still 1% above the moving average. Intermediate line moved lower, so we're back to light pink shading, even though we did get a bullish cross. The near-term line did cross up above the intermediate line. So we have a bullish cross there. The intermediate line, however, is still below market sentiment. Market sentiment still itself falling, but in the reversal zone. So the long-term trend is still bullish. It's still intact. There is, some weakness, hence the light pink shading, but nothing significant. Nothing that would suggest that, this is done yet per se. Let's take a look at the Nasdaq 100, as that's been the most correlated here lately with that. Again, you got the bullish cross of the near-term line above the intermediate line. The intermediate line falling just short so far of getting above 80, so a little disappointment there. But remember, its momentum line was not in the upper reversal zone on Friday. It was above the near-term line, but it wasn't above 80 like the S&P. We are only a 0.5% above the moving average on the Nasdaq, so it's a little bit weaker. It did get a bull tag. The S&P did not. We are still, I think we're still above. Yeah, we're still actually above the high of that bull tag. So we closed well above it Friday, and we're still closing above it today. So in that sense, again, it's a little bit of sign of weakness that we couldn't get the near-term line on day 2 into the reversal zone as you would want it to, right? The day 2 of crossing above 40. Friday was day 1. It was such a good pattern on the S&P, especially with the momentum line finishing in the reversal zone on Friday. So the fact that we didn't follow up with that with a good, strong near-term move today, like we did, say, on the other examples I shared with you, again, right when I was going on vacation there, and then here on the 24th, like those other instances, we did follow up with a strong near-term surge. Not so much here on this one. We barely got above 80 there at the end of May, and eventually, I mean, we stayed above 50 that entire time. It just wasn't a strong near-term rally up to the upside there. So again, small sign of weakness, but just like in May, that didn't end up causing any kind of intermediate decline yet. We will get one at some point. It's just not necessarily like today. The intermediate line is crossing above the market sentiment line just barely. You can see the numbers over here. It's just barely above the market sentiment, but it is. And the near-term line crossed above the intermediate line. So two bullish crosses today on the market forecast. Even if the momentum line did fall, the near-term line did get above 80. So we did get a good secondary, a second day on this near-term rally, even if it was a small down day, about down over 1%. But remember, we were up 4% on Friday, so that's a very small loss compared to what we saw previously. And then finally, your Dow Jones Industrial Average. You can see, again, its near-term line did not follow through, did not get above 80. It's weaker than the S&P and weaker than the Nasdaq. Was 0.75% drop. That is a bigger deal for the Dow than it was for the Russell. But we are still more than 1.5% above the moving average. So the intermediate line still in the reversal zone, still above market sentiment. So there is no need for the near-term line to cross above the intermediate line. We'd have liked to see it get above 80, and we'll see again. The momentum line's down on all these indexes, but it's down to bearish levels, but it's not down to oversold levels, right? So a good opportunity that this drop in the momentum would be temporary there. All right, so now the question is, okay, will this lead to more weakness the rest of the week? And I'm going to break down in the rest of the video today with these other indicators our expectations on how we started the week and how that colors the rest of the week and what we expect to see. Are we going to get a continuation of this bounce we started on Friday, or was the lack of the follow-through today showing signs of weakness elsewhere? So I'm going to break that down starting with our weekly chart. All right, well, that does it for our Market Outlook preview video. You can get the rest of the video, unlock the rest of that at marketscholars.com. There's a link to it down in the description below, as well as the pinned comment. You get access to the full version of the video. You get access to our trade idea as well. All of our subscribers get access to that, including our base level foundation tier at $29 a month, which works out to be less than $1.40 per day per video. But you get access to the full version of the video. You get access to every trade idea. We post one every day. You get access to the Market Outlook Live, where we manage those trades day after day after day. We explain when we get out of them, whether we should stay in them or not. And you also get access to our Market Outlook Live trade tracker, where we track the results of all those trades throughout the course of the year. So you can kind of see how they manage, how they do relative to, say, the value, how much you pay for access to them, as well as whatever benchmark, or the S&P 500, or whatever your benchmark is there. So we're up about 10 grand so far this year on the trades that we've done throughout the year, all the way from January 1st all the way up to now. So again, thank you very much for watching. Have a great rest of your Monday night. Make sure you're subscribed to the YouTube channel. Hit that like button, comment, and share. Follow me on Twitter for more content, as well as the other social media channels. Have a great rest of your Monday night, everybody. We'll see you all tomorrow.